Welcome back guys, Jai Shri Ram. So in our today's video we are going to talk about the trends of the market and the phases of the market. If you haven't subscribed yet, please subscribe to my channel. Thank you. So let us hop on to the content. Trend of the market. So we have two trends, that is uptrend and downtrend, or the uptrend is also called as bull phase and the downtrend is also called as bear phase. So what happens in the uptrend? So I'm going to pictorially draw what does a uptrend look like. So this is what our uptrend will look like. So in our uptrend we need to know some of the basic abbreviations, and that is, so maybe I will write the uptrend is uptrend. Uptrend is also called bull trend. Okay, so this is where the price is going to increase. The price is going to increase from its previous phases, so that is called the uptrend. So here we need to know that here we see that the price is going up, coming down, going up, coming down, going up, coming down, and going up. So one thing we need to observe here is every time when it is going up, it is breaking the previous high. So this is called the previous high of the market when it makes this high, and when it comes down, it always forms a low which is higher than the previous low. This is our first low, this is our second low, so the second low is always higher than the first low. So the abbreviations that we use here is higher high, HH, higher low, HL. So this is higher low 1, higher high 1, this is higher high 2, this will be our higher high 3, and the next that is going to get formed is higher high 4. And similar way we have higher low 1, higher low 2, higher low 3, and when we have a next higher low, then it will be our higher low 4, and so on. Okay, this is how a simple uptrend looks like. Okay, this is how a uptrend in a textbook will look like, but in the real market the uptrend might be a little bit different, which will be like, okay, it comes up, comes down, maybe something does like this, then break, then come down, something like break, and again slowly come down, and again break. So we have so many irregularities in between, right? So we might feel this is our low, this is our high, and all those things. So we have so many things, but this is how a textbook uptrend will look like, and this is how the actual uptrend will look like. So we have to be carefully watching the market and find out or predict based on our probabilities which will be the potential higher high and higher low. Okay, so this is about the uptrend. And similarly, if we just inverse the chart, it will be downtrend. So in the textbook, downtrend is what I'm showing right now. So it is going to look something like this. So we have lower high, lower low, lower high, lower low, lower high, and a potential lower low. Okay, so it's called lower high and lower low. Lower high and lower low. So lower high 1, lower high 2, lower high 3, lower low 1, lower low 2, lower low 3. Okay, so if it has to form another high, lower high, it will come somewhere like this and go down. So this is how a textbook downtrend will look like. But as we already know, this is not how the real market will be. Maybe it will do something like this, it will go up, and also while breaking down it will do something like this, and again going up it can go something like this, and then again while breaking down it can do something like this. But the thing is that how should we look this? We have to ignore all the noise and we have to see only this: low, high, low, high, low. And this is how our mind should work. Okay, so we have too many irregularities in between, but we have to concentrate on the bigger picture, that is the lower low and lower high. So yeah, we have two trends of market, that is uptrend and downtrend, are also called as bull trend and bear trend. So that is what we have covered just now. And the next thing that I'm going to cover in this video is the phases of market. There are 4 phases of market, and all these 4 phases appear in a cyclic form. Okay, there is nothing like, okay, the phase 1 is always the first one and the phase 2 is always the first second one. There is nothing like that. Market moves in these 4 phases, and irrespective of these phases, anything it can happen next. So we always have probability, so we cannot tell, okay, we cannot tell that, okay, after phase 2 phase 3 is going to come, or after phase 3 phase 4 is going to come. So okay, so I'm going to explain what are the 4 phases. The first phase that we have is accumulation. The second phase we have is uptrend. The third phase we have is condensation, and the fourth phase that we have is downtrend. Okay, so that's why I already explained about uptrend and downtrend in a while, and now we are going to talk about accumulation and condensation. Okay, both accumulation and condensation is same, but the thing is that the way it appears on the chart, or the point at which it occurs on the chart, is going to differentiate whether it is accumulation or condensation. And as I've already told you, this is not in the order. Anything can happen. It can happen like uptrend, downtrend, condensation, accumulation, anything can happen. Okay, so but I'm going to, for our better understanding, I'm going to explain the market in this order. So first phase is accumulation phase. I'm going to draw a rectangle for accumulation phase. Okay, so what happens in accumulation phase is the price will be trapped in a zone, like how I have marked this rectangle. The price is going to be tapped. Maybe internally there will be higher high, higher low, it will break, it will again go up, there will be higher low, there might be like strong momentum moves, again there might be low high, something like this. So there won't be any pure direction, right? Because you see that we think that this is lower trend, and okay, once there is some kind of breakdown and we already see that the price started reversing, and we feel that this point is breakout, and we see then the price is starting falling. So accumulation is a phase wherein we do not have any uptrend or downtrend. The price is going to be consolidated in a range. It will have so many fake breakouts and fake breakdowns which will trap all the retailers. So price is not going to do anything that you expect in accumulation. Okay, so this is called accumulation. Okay, and after accumulation we have something called as uptrend. So at some point of the time, this accumulation has to break, right? So when it breaks, it is going to break on the upper side. And what does the market do? It does what I am drawing right now. What is it called? A uptrend. You are right. So after an accumulation, we have a uptrend. What do we have in uptrend? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, so this is what we are going to see in a uptrend. Okay, so now we have discussed about accumulation. We know after accumulation we have a uptrend. Now what is condensation? I told you that accumulation and condensation is the same, but what will be the difference? Okay, so I'm going to draw another rectangle here. Okay, it is the same thing that happens in accumulation. The price will not have any behavior. It's going to have erratic behavior, higher highs, higher lows. The moment you think that it is going to fall, it's going to rise. The moment you think it's going to rise, it's going to fall, right? So what happens in condensation is the price will have erratic behavior. It is going to consolidate it in a defined range, and after condensation we have something called as downtrend. Okay, what do we have in downtrend? Higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low. Okay, so these are the four phases of market. Okay, maybe the uptrend I want to mark it in green because uptrend is always considered as green, and the lower trend I want to mark it as red because we have big red candles, and condensation and accumulation I have marked it in gray just visually so that you guys can recognize. You can screenshot this and use this for future reference. So here the difference between accumulation and condensation is after accumulation an uptrend is the result. Okay, and after condensation what is the result? Yeah, you are right, it's the downtrend. So the only difference between accumulation and condensation is the trend that comes after that. Okay, so these are the four phases of market, and market always moves in the same four phase. Okay, so what I've explained right now is kind of a textbook move. So I'm going to explain how the market might look in reality. Okay, maybe I'll just again start with accumulation, then we have uptrend. Okay, then we again have something like this. So what is this called? This is now not called as condensation because it is not a downtrend. So this is again accumulation. So we have accumulation phase 2, that is uptrend, and again an accumulation, and phase 2, that is uptrend. So now what happens is we again have some kind of condensation, we have downtrend, we have condensation, downtrend, accumulation, uptrend. So this is how the market will move. Okay, we will not have it will not always be like accumulation, uptrend, condensation, downtrend. No, that is not how it is supposed to be. We can have something like this: accumulation, uptrend, accumulation, uptrend, then downtrend, condensation, downtrend, accumulation, uptrend. So all the four phases are, you can do all sorts of permutations and combinations, and that is the amount of outcome that the market can have. Okay, Jai Shri Ram guys, thank you for watching. Please do like, share and subscribe to my channel.